Welcome to Charts from the Media. It is March 13th, 2014. We are going to be looking at three charts from BIDU, B-I-D-U. We'll take an investor's view, not a day trader's view. The stock has doubled in less than a year, but has recently hit resistance. Both the weekly and daily charts show divergence reversal signals. Where are the supports and entries? We will take a look at the weekly Fibonacci retracement levels, the daily charts with the candlesticks, the divergence, reversal and support levels, and then past entry signals using stochastics and MACD. Alright, let's start looking at the weekly chart. We had to move from March to March of below 85 up to 190. When we look at the Fibonacci retracement levels, the first level is at 149, then it goes down to 136. If you were to draw this line further over, this would be a pretty strong level because it's been used as resistance and support in the past. Okay, so kind of if we're looking at a 50% retracement, we'd be looking at the 136. So there's about $30 more to go there. When we look at the divergence in the oscillators, we have lower highs in the RSI and the Slow Stochastics. And then when we look at the candlestick, we definitely have a bearish engulfing candlestick this week. So this is indicating more downward movement to come. When we look at the daily chart, this would be a very bearish looking chart. Today it broke through the 50-day moving average quite solidly, completely engulfing candlestick. Back here, this would be Monday, it had a shooting star bearish candlestick. That would be your reversal right there, and then you would want the confirmation from the next candlestick, which is another bearish candlestick. When we look at the oscillators, the RSI was fairly even, however the MACD and the Slow Stochastics were both showing divergence at that time. For our first target, we're going to be looking at 150. The 150 level has been used in the past as support, and then that 149 is the Fibonacci retracement level. So what if you really like this stock and you're looking for places to get in? Well, the technicals have been quite consistent over the past year on giving you entry points. So when we look at the daily chart potential buy signals, if someone would have bought each time the Slow Stochastics down here moved above 20, after being below or touching, one would have been profitable every time within days over the past year. Okay? The worst signal crossings gave a second chance to enter it before a larger move. If you additionally filter it by looking at the MACD, if it goes from below 0 at that time up to positive, 5 of 6 times, one would have been profitable within 2 days of entry. So when we look at this, I have the Slow Stochastics at 14. Okay? As it crosses above the Slow Stochastics, the MACD is also crossing, you would have gotten in here. Went up a little bit. However, here's the second touch. You would have had convergence there. Again, it's above, so you would have entered there. That would have been your entry point there. Again, below, it's crossing above the 20 line. MACD is crossing above. That would have been your entry point again. We'll see it again here. This would not have been super profitable, but your MACD was not close to getting to the 0 line. If you would have waited, you could have even gotten in here and caught that large move up. And then it just continues on. Getting close to the MACD, and it goes up, your buy signal crosses the Slow Stochastics, you wait for it to go to the MACD, and then you'd be getting in again. And that just continues. So what would you want to do? Just wait for the Slow Stochastics to go below 20 as it crosses, look at the MACD, and there you could have an entry point. Thanks for watching. Visit chartsfromthemedia.com for definitions, learning tools, videos, and more.